Hi, managerial accounting students. Today we're going to get into Chapter 4, Process Costing. We spent the last two chapters, chapters 2 and 3, learning all about job order costing, which is the system we use when each of our jobs or products is somewhat unique in nature and it can be customized or specified to the customer's needs. In those situations, it makes sense to track our costs by job, materials, labor, overhead. But you may have wondered, well, what do we do when they're not unique in nature? What do we do when our product is essentially homogeneous? Do we still use job order costing? And the answer is no, we use process costing. So that's what we're going to learn in Chapter 4 today. So first, there's plenty of similarities between job order and process costing. Both systems are going to assign material, labor, and overhead costs to products, and they give us a mechanism to compute the unit product cost. Both systems are going to use the same type of accounts, which you've already learned, which include manufacturing overhead, which we call MO, raw materials, work in process, which we refer to as WIP, and finished goods. So remember, raw materials, WIP, and finished goods are all types of inventory on our balance sheet. MO, if you recall, kind of behaves like an asset, but it's just a bucket. And it's a bucket that has to be emptied out by the end of the period. So it doesn't end up appearing on the balance sheet. The flow of costs through those manufacturing accounts is basically the same in both systems. In job order costing, we're going to find that we have many different jobs worked on each period, and each job is going to be somewhat unique in terms of its production requirements. We accumulate costs by job, and our unit costs are computed by job on a job cost sheet, whether that's on paper or in a computerized system. In contrast, process costing, we have a single product produced either on a continuous basis or at least for long periods of time, so in large batches, for example. All units of product are identical. Costs are accumulated by department rather than job, and unit costs are computed by department. Try this quick check. Process costing is used for products that are I hope you picked B, similar and produced continuously. Each unit of product needs to be homogeneous. Each unit of product needs to be the same and produced on an ongoing basis to use a process costing system. In a process costing system, we need to be aware of what a department is, and that's any unit in the organization where materials, labor, or overhead are added to the product. And the activities in a department are performed uniformly. So all units that go in receive the same treatment. It's performed uniformly on those units. The output of a processing department must be homogeneous. So all of the units going out of a department must be the same. Products in a process costing environment typically flow in a sequence from one department to another. So let's think of some examples of when we might use process costing. We might use it for something like manufacturing cereal. I like to use Cheerios as an example. So as we think of our processing departments, we might have one department where we'll call it Department A, and its output is just plain old Cheerios. And some of those Cheerios might go straight to Department D for packaging and shipping. But some of the output of Department A could then be routed to Department B, where they might receive honey nut coating and become honey nut Cheerios. And then they could go to Department D for packaging and shipping. Or they could go from A to Department C, and they could receive apple cinnamon coating. And all of the units that come out of Department C would be homogeneous apple cinnamon Cheerios, and then they could go to Department D for packaging and shipping. It's not that we can only make one product. It's that we need to have a sequence, and the output of any one department is going to be homogeneous. So all of the units that came out of Department A were plain Cheerios. Where they went from there depends on the needs of the company. All of the units that came out of Department B were Honey Nut Cheerios. Everything that came out of Department C was Apple Cinnamon Cheerios. And then everything ends up going through Department D for packaging and shipping. So we'll learn how we're going to apply costs as the Cheerios pass through those departments as we go here. So in terms of that flow of materials, labor, and overhead, should look kind of like this. So we're going to take our direct materials, direct labor, and mow, and they all go into our work in process. That's really not new, right? We've looked at this model before in job order costing, right? Then we would apply each of it to jobs. So job order costing systems trace and apply manufacturing costs to jobs. When it's done, then it goes to finished goods, and then it gets sold. If we're looking at it in a process costing environment, then our costs are going to be traced and applied to departments. So direct materials, direct labor, and mow will be applied into the departments. Then when it's done, it goes to finished goods, and then it gets sold. So a lot of similarities here. So we're going to look at our flow of costs. So we're looking at two processing departments creatively named Department A and Department B, and we're going to look at our T accounts. So if we've got raw materials, which would start with a debit balance, we then would requisition materials into use, some for Department A, some for Department B. So when we requisition those materials, it would be a debit to WIP Department A, a debit to WIP Department B, and a credit to raw materials for the sum. Now keep in mind that direct materials is not an account title, it's a description of what we're doing. So the account title that we were using was WIP, work in process. So as in a job order costing system, materials are drawn from the storeroom using a materials requisition form. And again, it doesn't matter if that's paper or computerized, but some form of materials requisition. Materials can be added in any processing department. So this would be our journal entry that we were just discussing. So we are issuing raw materials to processing departments A and B. So we debit WIP Department A, debit WIP Department B, and credit raw materials for the total. Then we'll take a look at labor. So as workers are doing their work, we would be incurring labor cost. And again, direct labor is not an account title, but just a description of what's going on here. So we're going to be debiting WIP A for direct labor, debiting WIP B for direct labor, and we'd credit salaries and wages payable, unless it tells you to credit cash, but for now we'll stick with payable. So in a process costing system, labor costs are traced to the departments, not the individual jobs. So the following journal entry records the labor costs recorded to Department A and Department B. So again, debit WIP Department A, debit WIP Department B, and credit salaries and wages payable. And then finally we have our MO. So in our MO T account, we're going to be accumulating all of our actual overhead incurred on the debit side. Lots of different things could go into that. And then we're going to figure out how to apply our manufacturing overhead. And when we apply it, again, it'll be a debit to WIP A, a debit to WIP B, and a credit to manufacturing overhead. So manufacturing overhead cost is applied according to the amount of the allocation base that is incurred in the department. The following journal entry records the overhead cost applied to Department A and Department B. So again, we're debiting WIP Department A, debit WIP Department B, and credit manufacturing overhead. And then when we finish our work in Department A, it then gets transferred to Department B. So remember, we have a flow. So we need to be able to picture the flow of our work through our company. So it goes from Department A to Department B, and then from Department B, we'll probably finish it. So we're looking at the transferred in costs from Department A are added to manufacturing costs incurred in Department B. So when it's all done in Department A, we move it to Department B with a debit to WIP B and a credit to WIP A. And again, here's the same thing in journal entry form. We're debiting WIP Department B, it's going up, and we're crediting WIP Department A, it's going down. So assuming that Department B is our final department and now the product is complete, we're then going to transfer it from WIP Department B to finished goods. And remember that transfer, when we finish the product, that is COGMAN, cost of goods manufactured. So again, that's not an account title, that's a description of what's happening. So we're debiting finished goods, it goes up, and we're crediting WIP Department B, it's going down. And here's the same thing in journal entry form. After processing has been finished in Department B, the cost of completed units are then transferred to finished goods inventory. And then, of course, when we sell the product, then it is no longer finished goods inventory. It then moves to cost of goods sold and gets expensed on the income statement. So that's a debit to cost of goods sold, or COGS, and a credit to finished goods inventory. So finally, when a customer's order is filled and units are sold, the cost of units is transferred to cost of goods sold. Now here, they're showing exactly what we just discussed in journal entry form, but they've kind of ignored the sales part of this entry. We would be doing this in conjunction with recording the sale, where we record the sale and the payment method in Part A, and then here we would relieve the inventory in Part B. And Part B is what we're looking at. So they've kind of ignored Part A, but Part B is where we remove it from inventory and we expense it to COGS. So that's a debit to COGS and a credit to finished goods inventory. So a few key concepts that we need to understand with process costing. So in process costing, each department needs to calculate two numbers for reporting purposes. One is the cost of its ending WIP, and then also the cost of its completed units that were transferred to the next stage. And that next stage could be another department, or it could be to finished goods inventory. So in doing that, there's two different methods for performing those computations. The first being the weighted average method, which is what we're going to use. And then secondly, there's the FIFO method. I hope you remember the term FIFO from financial accounting, first in, first out. And that's covered in Appendix A. Appendix 4A covers FIFO method. We are not going to learn that. We are going to focus on the weighted average method only. So characteristics of the weighted average method. Under weighted average, there is no distinction between work done in the prior period and in the current period. It averages or blends all of those units together. So the cost from the prior and current periods get blended together. The equivalent units of production for a department are the number of units transferred to the next department, or that could be finished goods, plus the equivalent units in the department's ending WIP. The second key concept is conversion costs. So earlier in the semester, we learned what conversion costs are, and it's when we combine our direct labor and our MO together. So direct labor costs are often small in comparison to other product costs in a process costing system. And if you think about it, that kind of makes sense. The type of environment where we'd use process costing is probably heavily automated or mechanized. It's done by machines. So direct labor being relatively small, oftentimes we're going to take our direct labor and just add it right onto our manufacturing overhead, and we'll call it conversion costs. So therefore, direct labor and MO are often combined into one classification of product costs called conversion costs. So that's what we're looking at here. Usually our materials is somewhat substantial, and then we'll deal with our direct labor and our MO together, called conversion costs. And then key concept number 3, this one's really important. It's the idea of equivalent units. Equivalent units are the product of the number of partially completed units and the percentage of completion of those units. What they mean by product is that we multiply. So we're going to multiply the number of partially completed units and the percentage of completion of those units. And we need to calculate those equivalent units because the department is almost always going to have some partially completed units in its beginning and ending inventories. And these partially completed units complicate the determination of our output for a given period, and they would impact the unit cost that should be assigned to that output. So we need to factor in the equivalent units. We can't just ignore them. So a little bit more on equivalent units. So again, it's the number of partially completed units times our percentage of completion. The equivalent units is the number of complete units that should have been obtained from materials and effort that went into the partially complete units. So here's an example. Assume Department A has 500 units in its ending WIP inventory. So just the fact that it's in ending WIP and it hasn't been transferred out tells us that it is partially completed. And they tell us that they are 60% complete with respect to processing in the department. These 500 partially completed units are equivalent to 300 fully completed units. We're taking 500 units times 60% to get the 300. Department A's ending WIP would contain 300 equivalent units for the period. Let's try this quick check. For the current period, Joan started 15,000 units and completed 10,000 units, which leaves 5,000 units in process, and they're 30% complete. How many equivalent units of production did Jones have for the period? So start with the ones that you know are completed, and then add the partially completed units. Go ahead and pause for a moment while you figure it out. So I hope you came up with B, 11,500, which is 10,000 units that are for sure completed, and then 5,000 units that are 30% complete. 5,000 times 30% is 1,500, so we get 11,500 total. So next, we're going to walk through the steps in the process costing system. I'm going to lay it out for you in 4 steps, and I'll make sure that you've got all 4 of those steps by the time we're done. So step 1, we're going to compute the equivalent units of production. So there's step 1. We're going to keep building on that. So as we do step 1, we're looking at Smith Company as our example, and they reported the following activity in the assembly department for the month of June. So we have our beginning WIP, which is 300 units, 40% complete for materials, 20% complete for conversion. So first of all, a few things here. We need to get used to this format where we keep things in columns. We've got our units, and then we separate out the materials and the conversion, keeping those 2 items in separate columns. Also, I want to note, under the weighted average method, the beginning percentage of completion does not matter. It's just 300 units. If we were using FIFO, these beginning percentages do matter. But under weighted average, they do not matter, so that's extra information that we don't need. What we need is 300 units. Then, during June, we start 6,000 units into production, so that would be 6,300 units. And then they complete and transferred out 5,400 units. So 6,300 minus 5,400 leaves us 900 units in our ending WIP. And they tell us that they're 60% complete for materials and 30% complete for conversion. So what we want to do is figure out our equivalent units of production. And we always start by computing the ones that are actually completed and transferred. We know those ones for sure. 5,400 were transferred out. Then we add in the partially completed units. So for materials, it's 900 units times 60% is 540. And for conversion, it's 900 units times 30% is 270. So then note that we're continuing to keep these separate, materials and conversion. So our equivalent units of production with respect to materials is 5,940, and with respect to conversion is 5,670. The equivalent units of production always equals the units completed and transferred plus the equivalent units remaining in WIP. That's important. It's the units completed and transferred plus the equivalent units in WIP. So visually, this is what we're doing. I find this a little bit hard to read. I like the charts and columns a bit better, but this is what we're talking about. So we had 300 units, and then we start more units into process, and then we have ending WIP that is 900 units. So the ones that are completed are 5,400 units that get completed, plus 60% of those 900 is 5,940. And we see similar for conversion. We've got 5,400 units completed, and then 30% of the ending WIP, the 9,000, is our equivalent units for a total of 5,670. So next we need to compute the cost per equivalent unit. So that's going to be step 2. Step 2, compute the cost per equivalent unit. We're going to keep building our 4 steps here. So lots of data here. Our beginning WIP, remember, was 300 units, and they give us our beginning cost. For materials, 6,119. For conversion, 3,920. And again, I still don't care about their percentage of completion, but I certainly do care about these dollars. That matters. So then during the period, we've got 6,000 more units, and then we completed 5,400 of them. In that time, we added materials cost of $118,621 and conversion cost of $81,130. And of course, our ending WIP still 60% complete for materials, 30% complete for conversion. So a lot of information there. What we want to do is get the cost of our beginning WIP plus the cost added during the period and divide it by our equivalent units of production. But keep in mind, we need to do this separately for materials and conversion. So if we're looking at materials, we had beginning costs of 6,119. We added in 118,621 during June for a total of 124,740. And then we're going to divide it by what we computed in step 1, our equivalent units of production. For conversion, we're going to take our beginning conversion costs. We added 81,130 during the period, so our total costs are 85,050. And again, we divide it by the equivalent units of production that we computed in step 1. And then we get our cost per equivalent unit. So 124,740 divided by 5,940 gives us $21 per equivalent unit for materials. Separately, we do it for conversion. 85,050 divided by 5,670, we get $15 for conversion. And then we could add these together and say that our cost per equivalent unit is $36. That is different, however, than taking this 209,790 and dividing it by the sum of our equivalent units. That's different math. Don't do that. Do it separately, materials, separately conversion, and then we could add those together and say our cost per equivalent unit is $36. But for now, focus on keeping things separate, materials and conversion. So next we need to assign our cost to units using weighted average. So this is step 3, assign or apply cost per equivalent unit to. We need to first apply it to our units completed and transferred out. And then secondly, we need to apply it to our units remaining in WIP. So our WIP our equivalent units, 540 for materials and 270 for conversion. Now we're going to multiply by what we computed in part 2, our cost per equivalent unit. So we're taking what we computed from step 2 and we're applying it to our equivalent units that we computed back in step 1. So our cost of our ending WIP is 540 times $21 is $11,340 plus 270 units times $15 is $4,050. We add those up for a total ending WIP of $15,390. So that's our ending WIP. The units transferred out, we know is 5,400 for both materials and conversion. And again, we're going to multiply by our cost per equivalent unit from step 2. So 21 for materials, 15 for conversion. We multiply and we get 113,400 for materials and 81,000 for conversion for a total of 194,400. So that's step 3. We've applied our cost to our ending WIP and to our units transferred out. And finally, step 4, we need to reconcile. Essentially what we're saying is that we need to prove that all of our costs have been accounted for. And essentially what we're going to be showing is that our costs from step 2, materials and conversion, balance with all of our costs that we applied in step 3. So let's take a look at how this works. So our total cost to be accounted for, the cost of our beginning WIP was $10,039, and our cost added to production during the period was $199,751. And we can go back and find where we got those numbers from. I can go back to part 2 and we would see our costs added during the period, okay, 199,751. For a total of 209,790, right? Those are the same numbers that we're talking about here. And what we need to show is that that 209,790 balances or reconciles with what we applied in step 3. So we just applied 15,390 is our ending WIP, and the cost of our units transferred out is 194,400. And those are numbers that we just computed in step 3. 15,390, 194,400. And so we see that those numbers reconcile, they balance, which tells us we've done something right. So we always want to reconcile and make sure all of our dollars are accounted for. So that's our 4 steps. So in review, we want to compute our equivalent units of production, which is going to be the units completed and transferred plus the partially completed units. Step 2, we want to compute our cost per equivalent unit. We're going to do that by taking our beginning WIP costs plus our cost added during the period and dividing it by our equivalent units of production from number 1. Remember to keep it separate for materials and conversion. Then step 3, we're going to apply that cost per equivalent unit to the units completed and transferred out and the units remaining in WIP. Again, we want to keep things separate for materials and conversion up until the end of step 3, where we'll finally add those numbers together. And then finally, step 4, we're essentially going to reconcile, showing that all of our costs that we accounted for in step 2, materials and conversion, balance out with everything that we applied to our units transferred out and our ending WIP in step 3. So we want to show that everything's been accounted for. So that's process costing in 4 simple steps. You'll definitely want to practice that in your exercises and homework this week. Finally, a concept called operation costing is essentially a hybrid of job order and process costing, and it possesses attributes of both. Operation costing is commonly used when batches of many different products pass through the same department. So, as those jobs or batches pass through departments, we'll be applying costs from those departments into those jobs or batches. So, it's kind of a hybrid of both. Just knowing that it exists is all that you need to know about for now, and that would be a concept covered in a later course. All right, that's it for chapter 4. Kind of short and sweet, but make sure you practice those 4 steps and let me know if you have any questions.